public consciousness is definitely at its highest level in terms of recognizing that climate change is real and that we have to do something about it.
There's been a neat evolution that's happened in a pretty tight time frame where socially responsible investing equaled negative screening to today where responsible investing equals we're going to seek out the leaders in the sector and invest and give them capital and benefit from their leadership on the financial, environmental, and social bottom lines.
Institutional investors, big capital markets are starting to take environmental, social, and governance factors into account in investment decision making. Like the best companies recognize that if you're good to your employees, if you're good to your communities, if you're good to your shareholders, and if you're good to your customers, that you'll prosper, you'll do well.
It's been quite an interesting period in my 30 years of investment management experience. I've never seen such an earthquake-sized shift around an issue or a theme, if you will, and involving so many different parts of society, governments, corporations, and even us in the state investment community.
All of the major political parties are addressing climate change. They all recognize they have to address it. Countries throughout the world are addressing climate change. I believe there is a momentum towards addressing this problem, and that as we move towards new solutions that are dealing with climate change, we'll see companies that will actually prosper and deliver great returns.
Responsible investor, it doesn't mean you're investing in Mother Teresa. You're investing in companies that are on the TSX, companies like Suncor, companies like Catalyst Paper, big multinational corporations. But those are companies that have taken a bet, and their bet is on a world that is going to treat environmental factors and social factors is more relevant and more relevant to their business model. And they're looking at those factors for how they can affect opportunities and risks for their bottom lines. It's about having a more sophisticated view of what drives investment returns on the intangible side, on the side that you can't necessarily see, on the good management side. And these factors, through many, many studies, are increasingly linked to how well they manage environmental and social factors.
Environmental responsibility, social responsibility, good corporate governance, each of these contributes to the value of a company. By ensuring that companies are paying attention to these attributes, we can protect the shareholder value. Today, you look at companies that are trading, a significant amount of what they're worth is based on their brand, their reputation. When a company is performing well in environmental, social, and governance, they will actually protect their brand, protect their value. Some of the better companies are quite responsive to shareholders, and shareholders who've brought this to their attention, companies like Petrocan, Suncor, have been very responsive and are actually taking steps to invest in renewable energy. They're involved in measuring their carbon emissions and developing plans to reduce those emissions.
I think a lot of people out there really want to invest in this manner and be somewhat assured that not only can they make a good return, but they can also, they're doing so in companies that are trying to make a better environment, a better world in all aspects, not just the environmental, but how they conduct their relations with employees and so on, the communities that they work in. So, but I think they just need a greater belief level, and this is why we're working very hard with advisors to bring their knowledge level up as to our processes and how we go about things. And I think as that evolves, we're going to see a very much more positive flow of funds into this whole area and into responsible investing.
When a client comes to the advisor and asks them, is there anything I can do? You know, I hear about these big investment opportunities out there, and I see climate change as a big issue. Is there anything I can do? And ask their advisor that. The advisor can answer one of two things. The advisor can say, I don't know. Or the advisor can say, well, there's several options out there, and here's a 3- and 5-year return, and here's how it can make a bit of a difference to the bottom line. Advisors that can do that stand to retain their clients and maybe to gain referrals as well. Advisors that say, I don't know, well, they may not be growing their client base as quickly.
Activism has evolved over the years, going from protesting and doing leaflets to writing letters to working on research reports to lobbying government in order to create change. And I feel that I'm at a place today where I'm working to create change by being a part of the economy.
Everybody gets their annual reports, how their investments are performing. And they can see the number and they care about the number a lot because that's relevant to their retirement or their children's education. But if there's a story in there too, and they can see, oh wow, you know, this company is doing this amazing water program that's reducing its risk in Africa, and it's also enhancing the community there. And the idea for this started with the fund that I invest in. So it's great, I'm making money, I need that. And it's also pretty neat that my investment's making a positive difference too.
We depend on companies to become sustainable, and we depend on them for our economic growth and for our economic well-being. So to the extent that Inhance, as an investment management company, can influence companies to be more sustainable, that to me is a great reward, and it's why I get up in the morning.
It's clear now, going forward, that investors will have to make a choice, and financial advisors will play a key role in helping investors balance their needs and goals and incorporate return on responsibility in their investment portfolio.